Hello and welcome to Startup Street. I'm Shruti Mishra and these are the top headlines from the startup space. Vara, a health tech platform, raises $108,000 in a pre-seed funding round, which includes FDI from a French investor. The investment will support the company's international expansion plans and its goal of influencing global child health standards. Beauty and personal care firm Wow Skin Science reports a decline in revenue for the second straight year, while losses reduced by about 40% in FY24. Toffler reports that Wow Skin Science's parent company, Body Cupid, saw a 10% drop in operating revenue in FY24 as compared to the previous year. Days after food and safety officials in Hyderabad found 18 kilos of button mushrooms with a future date of packaging at a Hyperpure warehouse, Zomato CEO Dipinder Goyal clarifies on X, saying it happened due to a manual typing error on the vendor's side. He adds that these were already identified by our warehouse team and were rejected during an inward quality check. Apple will invest up to $1.5 billion in Globalstar to fund the expansion of its iPhone communication services. Under the agreement, Apple will commit $1.1 billion in cash and also purchase 20% equity in Globalstar for $400 million. The satellite company will use a portion of the funds to pay down debt. Walt Disney is forming a new group to coordinate the use of artificial intelligence and mixed reality. The media giant explores applications across its film, television and theme park divisions. The newly formed Office of Technology Enablement will be led by Jamie Warris, the film studio's Chief Technology Officer. Well, those were the headlines we've been tracking for you this evening. AI-powered end-to-end automation platform EvoluteIQ that helps organizations optimize workflows and reduce operational costs has raised $20 million in an equity and debt round led by Round 2 Capital with participation from Nordia Growth Fund, DCAP Select and PH Ventures. This funding will support EvoluteIQ's plan to enhance its AI automation platform and expand operations globally. To elaborate more, joining me now is its co-founder and CEO, Sameet Gupta. Sameet, welcome to Startup Street. This round is a mix of equity and debt, like I just mentioned. Tell us why, and if you could also share the percentage mix. And with this funding round, what is the current valuation of the company, Sameet?
So, first of all, thanks for having me. It's a big event for us. EvoluteIQ, we've been around since 2019, and we've been scaling very well. This particular one intentionally is a combination of equity and debt because we have been a very capable firm for the last 4 or 5 years since we started, and our ability to service debt is high, which is very unlikely for an organization our size and in this stage of our careers.
Yeah.
In terms of what is the mix, unfortunately, I'm not at liberty to divulge the valuation, but let me tell you, it's a fairly premium valuation. Given the current market circumstances, as well as where the market is today. And we're very proud of the fact, and it's a validation of all the effort the team members have put together.
All right, Sameet. Like we all know, artificial intelligence has ushered in an unprecedented scale of change across industries globally. Tell us how you're helping enterprises effectively navigate this transformative landscape. How do you help your clients enhance productivity, minimize operational complexity, and accelerate digital transformation?
So, artificial intelligence is not something new. I think it's been around for a very, very long time. For many of us, and if I talk about myself and my founding team of Sanjay, Deepak, Arun, and Naveen, all of us have lived this for the last 20, 25 years of our technology life, right? And what we are seeing today is actually it becoming mainstream. It becoming very, very core to the business. And artificial intelligence is not going to be a program or a project that every organization needs to do. Actually, it is going to become the way of life for every organization out there, whether you're an airline or a manufacturing company or a bank. It is not just the way of the future, but it is a way of existence. It is a way of competing. And so it has to become very, very core to what every single organization is doing. As far as EvoluteIQ is concerned, right, I think, our assumption and thesis and philosophy is very, very simple. We look at every organization as an amalgamation of finite processes. Because, whether you're a bank or you're an airline company, what you're essentially doing is you do a set of things and you create an output, right? And that output is either a ticket or it is a service in terms of KYC or, giving a loan or whatever it is. But what it essentially does is creates an output which a customer receives. Our ability to enhance this output through technology, so you can do it faster, you can give a better customer experience, you can make this entire process more intelligent by enabling the people who are part of the process make key decisions or help them make decisions. That's what EvoluteIQ does, right? So give a better experience, get it faster to the market, and essentially enhance what the people are doing. And that's something very, very unique, leveraging what we call generative AI, which we have been doing since our inception.
All right, let me now get to the fundraise. With the fresh funds raise, Amit, you plan to accelerate the expansion of EvoluteIQ's intelligent business automation platform globally. What new markets are you eyeing, and any new offerings in the pipeline that you can tell us about?
Yeah, so we will leverage this extensively to go after the US market. We already have an office in Menlo Park. We expect to do the same in New York as well. That's from a geographic perspective. Healthcare and insurance for us is ramping up pretty significantly. Those are the two areas that we see where the growth is, and those will be the areas we will invest. In terms of the offerings, right? Agentic AI and what we call large action models. That's the future, right? It is not just about giving something intelligent back or just having an LLM in the process.
Sure.
The important thing is what happens after that, right? I mean, if I give you intelligence, the ability to act on it is what is important. And I think the biggest differentiator for us as a platform is that we've been able to do that with some of the largest customers out there, a few $100 billion companies, a few Fortune 500, Fortune 200 companies that are out there. So feel very proud of these new offerings we are bringing into the market.
Absolutely. Picking up from what you just mentioned, Samit, you have a customer base across key industries like healthcare, BFS, and insurance. And you've also seen rapid adoption of your EIQ platform across Fortune 500 organizations globally. What is the kind of impact and the efficiency that you've been able to provide your clients with your offerings? Can you share some use cases?
Sure. So, there are multiple use cases, right? And I think one of the newer ones, which is my favorite, is for a $100 billion plus healthcare company in the US, where we are helping them acquire customers, right? And the most important part of doing some of these things is bringing efficiencies, like if a manual process was done and people use bits and pieces of other technologies to automate parts of the process, we were able to, come in and, bring the entire process down by close to about 40% in terms of time. So the ability for this particular customer to take, go out there and acquire customers and literally bring cash and revenue back into the company is improved by 30 to 40%, which I think is pretty phenomenal in today's marketplace.
Sure. Very quickly, one final question, if you could answer in 30 seconds. Take us through the current business growth numbers and your revenue model. Also, what is the road to profitability looking like?
So, we've been very prudent and sensible with our capital, right? So, we have been running a positive EBITDA for the past few years, and we'll continue to grow on that. In terms of some of the numbers which make me and my team very, very proud, and, I'm the spokesperson for all of us here, is the fact that, our net retention run rate with customers has been more than 180% for the last few years. And that speaks very well of the kind of product and platform that we've built. We've been scaling the business very, very well. So, our CAGR has been north of 100% the past few years, and the intent is to continue to grow that. So, it's been a fun ride, but, the work has just begun, right?
All right. Thank you so much for joining us on Startup Street. Wish you the very best with all your growth plans, and may the fun ride continue. Thank you so much, Amit, for joining us today.
Really appreciate it.
Well, moving on. EV as a service platform, Hala Mobility has secured 51 crore rupees in its pre-Series A funding round, a combination of debt and equity. The round saw participation from startup founders, angels, and a network of high net worth individuals and family offices. Now, this new capital will be instrumental in scaling Hala Mobility's EV fleet and expanding its footprint across India. To tell us more, I'm now joined by its co-founder, Srikanth Reddy. Srikanth, welcome to Startup Street. You provide an EV as a service platform designed for e-commerce companies and gig workers. On offer is an app with software for EV, battery and driver management, along with a fleet of electric two-wheelers. First, take us to Hala Mobility's current scale of operations and the kind of impact you've made so far, the kind of revenues you've made so far. Srikanth, can you unmute yourself?
Hi, Shruti.
Yes.
Thanks for that brief introduction. And as Hala, I'm on mute. Like, I'm audible?
Yes, we can hear you.
Oh. So, till date, we have been running with more than 3,000 odd vehicles. We've been running pilots across 10 cities. Hyderabad has been our epicenter where 98% of our business runs. Today, we are in Hyderabad, Vijayawada, Visakhapatnam, Guntur, Chennai, and Bengaluru. Our aim is to increase the fleet across the six geographies, and then be with the 10,000 fleet by the next December at least, and thereby scaling up the numbers across other cities as well. Our target is to at least start pilots in Mumbai, Pune, Kochi, and Coimbatore, thereby marking 10-city mark, in the South Indian states. With these 3,000 vehicles, we have grown more than 132 million kilometers without emitting any carbon emissions, saving around tons of CO2 emissions and reducing down consumption of a lot of fuel.
Okay. All right, Srikanth, like you mentioned, you have a current fleet of 3,000 EV vehicles. And I believe with the fresh funds raised, you plan to deploy 10,000 new electric vehicles by December next year. Also, you just spoke about the kind of operations and the kind of impact that the company has made so far. And I have to again remind our audiences of the 51 crore rupees that you've raised in your Series A funding round, which is again a combination of debt and equity. The round has saw participation from startup founders, angels, and family offices. And like you mentioned, you will use this funding to scale Hala Mobility's EV fleet, that is up to 10,000 vehicles, and expand your footprint across India. You mentioned some of the cities that you're currently looking at. Srikanth, also, EV as a service platform, we'll delve deeper into the kind of offerings that you're doing, the kind of partnerships that you've built so far, and who you're also looking to onboard currently. You mentioned the kind of impact that has had. We now get to the fresh funds raised, and if you're on track to achieve those targets. Also, I have to tell our audience that Hala Mobility has a dense service network set up. It's named S3 stations that kind of serve as the epicenter of demand and supply. Of course, we'll get Srikanth to talk to us about how he's helping clients efficiently manage ground operations, leading to your claim of increase in revenue and reduced churn. But before we get that, let's get into a short commercial break. We'll be back. Stay tuned to CNBC TV18. Welcome back to Startup Street. EV as a service platform Hala Mobility has secured 51 crore rupees in its pre-Series A funding round, which is a combination of debt and equity. The round has seen participation from startup founders, angels, high net worth individuals and family offices. And this new capital will be instrumental in scaling Hala Mobility's EV fleet and expanding its footprint across India. I'm now joined by its co-founder, Shrikant Reddy. Shrikant, I believe we've got you back. You provide EV as a service platform designed for e-commerce companies and gig workers. On offer is, of course, a software for EV battery, driver management, along with a fleet of electric two-wheelers. Take us through Hala Mobility's current scale of operations quickly and the kind of impact you've made so far.
So, Shruti, with more than 3,000 EV vehicles, we are running across 6 cities today. Our major epicenter being Hyderabad location. Along with that, we have also kind of started our operations in tier 2, tier 3 cities like Vijayawada, Guntur, Visakhapatnam, alongside Bangalore and Chennai as well. With 3,000 odd vehicles, we have run more than 132 million green kilometers, saving tons of CO2 emissions and thousands of liters of petrol consumption. With the fresh funds, we are aiming to expand our footprint across these geographies of 6 cities, plus starting the pilots in Mumbai, Pune, Kochi and Coimbatore as well. As an EV as a service, all these e-commerce companies are moving towards the electric vehicle ecosystem because we are saving them almost 25% of cost per delivery that they're doing. At the same time, the delivery partner who is using this particular vehicle is able to save at least 50% of his expenses when compared to the petrol vehicles. So that's the value we are able to bring into the business as well as the drivers who are using our kind of platforms today.
All right, with the fresh funds raised, Shrikant, you plan to deploy 10,000 new electric vehicles by December next year. Tell us if you're on track and also take us through the geographical expansion plans. You touched upon it a bit earlier.
So with this fresh funds, we are aiming to deploy at least 10,000 fleet by at least December next year, which is 12 to 14 months from now. The expansion is going to be seen in the 6 cities which we have today. As I told, we have at least 90% business coming from Hyderabad region. We wanted to diversify that a little bit. We have run our pilots for at least 2 years now in Bangalore, Chennai, Vijayawada, Visakhapatnam, Guntur. So we wanted to penetrate more into these demographics. At the same time, start a little more pilots in Mumbai, Pune, Kochi and Coimbatore regions.
All right. Shrikant, you have a dense service network set up named S3 stations that serve as the epicenter of demand and supply. Tell us how you've been able to help clients efficiently manage ground operations, leading to your claim of an increase in revenue by 25% and reduced churn by 42%, even increase earning potential by 48%. How are you doing that?
So we play around a lot of data points, right? All these vehicles carry a lot of information that we process day-on-day basis. Every trip is calculated, every distance is being calculated. And given the moment that we run into one of the cities, we divide the cities into clusters. We get the hotspots on where the demand centers are and where the utilization pieces happen. So we understand the pattern of how the dark stores, how the warehouses are placed, and that's how we work on a hub and spoke model. So for every city, we have one central mother hub and then distributed across our pit stops called as S3 network, which is service cum swapping station. The service cum swapping station is a epicenter which is placed at least 3 to 5 kilometer distance that will serve any vehicle to be attached to, it can be a quick commerce, it can be an e-commerce, it can be a hyper-local center. So with the data that we receive from the vehicles, the data that we receive from the on-ground operations, and the demand that we get from the businesses side, we kind of interpolate them, and the software is able to take its decision in distribution of these vehicles, distribution of batteries, and the charge point operators.
All right. Shrikant, you're currently working with Big Basket, Zomato and Zepto and have partnered with 13 scooters and 8 battery manufacturers, I believe. Any new partners that you're looking to onboard?
So all this while we wanted to get into more manufacturers here is because every business model needs a different kind of a vehicle. So there is no purpose-built vehicle at this point of a time, at least in the two-wheeler segment. So we had to test, trial, validate different products, and that's why we had multiple scooter manufacturers. But now we are kind of zeroing down to at least 3 or 4 manufacturers out of the 13, and only those vehicles will be spread across so that my supply chain problems will be reduced down, and I'll be able to give better uptime guarantees for my customers from 95%.
Okay. Shrikant, take us through some of the future applications across the EV ecosystem towards a greener, tech-driven future. What's in store?
Sure. So as I said, we work in a hub and spoke model. Although we are consuming electricity today, which is not a pure play coming from the solar side, it's not a renewable energy, it is coming from the thermal side of it. We want to ensure that all these dark stores to be converted into solar energy. And the infrastructure that we're setting up, these are going to be used by multiple charge point operators, multiple swapping stations, and multiple service areas as well, right? So that's why the name service comes swapping station. And at this location, if the battery as service also will be enabled, that's how we are looking at. Today, we are providing only EV as a service. Tomorrow, we should be in a position where someone owns a vehicle and, battery as a service moves through our channel. So that's how we kind of wanted to go into EV as a service or battery as a service. Plus, now we are starting a new feature rollout that is called as Hala Plus, where consumers or retail investors can own certain set of vehicles, they can run their operations.
Okay.
We give them the know-how. That's why we are kind of moving into a platform as a service as well.
All right, Shrikant, on that note, I'll have to wrap up our conversation. The future of mobility has to be clean and efficient, and we wish you the very best in driving that. Thank you so much for joining us today on Startup Street. Moving on. 2 years ago, Dubai unveiled the world's first regulatory body dedicated exclusively to virtual assets, from crypto to traditional finance on blockchain. It's called the Virtual Assets Regulatory Authority, or Vara. How has the government body brought emerging players in the sector to the negotiating table to foster innovation while managing risks? My colleague Aishwarya Anand finds out from Vara's Managing Director Deepa Raja Karban on the sidelines of Jitex Global. Take a look.
So I would say 2 years ago, when we were set up, 2.5 years coming up on, right, it was a different world. We were in a place where crypto was very native crypto only. And over the last year, since we've started to have our full-fledged traditional license, we find a lot more TradFi players participating in it. So what used to be a bringing people to the negotiating table, as you rightly put it, has changed dramatically. People want to be regulated, right? People want to be in a place where there is a credibility attached to them being regulated and being able to participate in this industry and service a global audience at that. So that's been a huge shift for us.
When you're thinking of giving the license to a particular company, what are the parameters that you look at? And, of course, like Binance is like the latest example who's gotten the chance to re-enter Dubai. So help us understand, what is the advice that you give to founders who want to get a license from Vara? And, what are the parameters that you work on?
So we have a fairly comprehensive regulatory book, right, which we had put together over the last couple of years. It came into full play before our full-fledged licenses started to get issued. It is not necessarily a derivative of TradFi. It's quite customized for the DeFi world, but certainly based off TradFi principles, right? And as a consequence, you're in a place where you start to understand that the audience that's talking to you has not only made itself aware of the rules before they come in for those dialogues, but you're also seeing a lot more advisory bodies. But the second part of it is a few bad actors do not spoil the name of an industry. It's been in existence for well over 2 decades now, right? The blockchain ecosystem has been around for a long time. In fact, the Indian market has done phenomenally well in having your gift city. You've obviously had huge amounts of investment that have been made in breeding that talent, inculcating that talent. And you find that, 12% of the global web developers, our blockchain developers, are from India, right? So you clearly understand that, your market clearly understands, and this is about saying a regulatory environment gives you a chance to scale.
We've seen a lot of Indian Web3 companies migrate to UAE and set up in Dubai. So, is there some conversation? Because, of course, like the crypto tax there is pretty high, and I understand the benefits that Dubai provides to them. But, are you in talks with the government to work together on something? And since you've provided the license to a lot of global crypto companies, are there any particular Indian companies that you're in talks with that you're excited about?
So firstly, great question, right? And bilats are a prerequisite to any industry scaling, especially when you talk about the Web3 blockchain world. It's a borderless economy, and we're heading towards that already, right? We've got 6 million, 10 million people in the UAE, 6 million in Dubai, right? And that is not a large enough population base for you to build an industry around. But that's always been part of our DNA. We create industries to become the hub for the wider region, the super region. India is included, the subcontinent, of course, and the rest of the world. So for that, you basically need the credibility of that government to feel that it's a risk they're willing to undertake to cater to their market. Up until such time as the Indian market has developed a set of very customized rules for this industry to cater specifically for the Indian market, and this applies to the rest of the world, it's not India specific, right? You need to move towards some level of harmonization and regulations globally. And the world's still getting there, right? And that's essentially the conversation we're having with a whole bunch of regulators, India being one. We've had, I mean, the CIPA was signed, the Comprehensive Economic Partnership Agreement, about 2 years ago. And since then, the trade relationships with India have absolutely skyrocketed. It was always great, and now it's just moved from being number 3 to number 1 as far as trade partnership is concerned, which is phenomenally good. And this is not just for traditional finance trade and commodities trade, right? It's very much about talent.
UAE wants to create 40,000 virtual asset jobs by the end of 2030. But what's the balancing act between regulation and fostering innovation, and how is Vara driving that?
So this is not one or the other. It's not a choice, right? It has to happen together. Absolutely must. Innovation only comes when there is regulation. You've seen the world of crypto. Absolutely go through, let's not bother, they're not going to be there anyway. And it's just absolutely, it's been a roller coaster. But what's phenomenal is the fact that the industry has actually come back, and how, right? Not just in the rest of the world, but also in India. So I do think that in the context of the UAE wanting to create X 100,000 jobs, even the coders visa, the golden visa program, the talent program that we have created is for entities to understand that regulation helps you actually gain credibility and get there faster. And most of your companies are heading to IPO, and you've also found in that space that only works if you are people that understand the need for compliance.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned to CNBC TV18.